2022 to 2023. It's not a big change, but it still indicates an improvement in creating profits because even though the net sales decrease, the cost of goods sold also decrease, which helps increase the profit, which thus increasing the gross profit margin ratio. Ah, not working. Wait. Okay. And as for the profit margin ratio, we use net income to divide by net sales. And for both 2022 and 2023, we get a profit margin ratio of 25.3%. So there's actually a 0% change. This means that there is no change in the profit that the company makes. Usually within the technology industry, companies have a profit margin of 2.6 or while some other companies might even have a negative profit margin. Apple with the 25.3 of profit margin demonstrates a strong ability in making profit in the technology industry. This rate is not consistent with the profit rate.
And then maybe you can do a pass on slide. Like now I'm gonna pass it to Jay to do return on assets ratio. To,
Okay,
to make him flow more naturally.
okay. Now I'm gonna pass it on to Jake for the return on asset ratio.
To find return on assets, we divide net income by average total assets. The net income of Apple's shares in 2023 is 35,000 no no $352,583. Sorry.
352, 583 million. You can say it like that.
Okay.
Right?
To find the average total assets, we add both 2022 and 2023 net total assets, which is 352,853 million. Wait, sorry.
Just say
352
352 and then 583 million.
352 583 million plus 352 755 million
Good job.
divided by 2,
Mm-hmm.
and we get 352 69 million, and we divide that by total current assets, which is 352 $669 million, and we get a total return on assets of 27.5%. Based on the percentages of the return on assets, it tells us that Apple is doing really well using their assets effectively to generate income. Apple does use a straight line depreciation method for their office buildings, machinery to manufacture products and equipment such as their computers and servers. Sorry. Such as their computers and servers. Sorry, this is not flowing. I need to fix it.
Okay, that's fine. That's why we're here. It's fine. Okay.
Such as our computers and servers depreciating in a time span of 7 to 10 years. I think the release of a wider variety of products, such as the Apple Vision Pro, really helped hype up the company to get people to spend money on Apple products. And for the Apple Vision Pro being the first VR Apple has released.
Mhm.
For earnings per share, we take the net income and subtract it by the preferred dividends, then divide it by the weighted average common shares outstanding. So the net income is 96,900. Sorry, 96,995 million.
Good.
96,995 million.
Yeah. It doesn't really matter how you say it, to be honest, because you can see the values.
Yeah, do
Uh,
we actually have to say it though?
Up to you. I think it depends on how you want to present.
I feel like if we don't say it, it's gonna be faster, right?
Well, we do have 2 to 3 minutes that we need to cover per person, so it really depends.
2 to 3 minutes for 2 slides.
I think it's good to say, like, let's say, like, you know, kind of following what professor likes. So it's good to take
Okay.
advantage of that. So you can say it, but if you do say it, just make sure you say it right. Or if you stutter,
Oh, shoot.
like, I mean, like, if you stutter,
Um,
just like don't let that like distract you, because then
wait,
I
wait.
think people might get distracted, right? Does that make sense?
Mm.
Why did you do it wrong? I think it's correct. Oh, I think my internet is not good.
Okay. So to find earnings per share, we take net income, subtract by the preferred dividends, divided by the weighted average common shares outstanding. The net income was $96,995 million. Is it billion or million, right?
Million, yeah.
Minus zero because there were no preferred dividends, divided by the $15,744,231, which is $6.16 per share. Apple is generating a healthy income per share. As in the previous year, Apple had an earnings per share of $5.67. This shows an 8.64% increase in earnings per share compared to the previous year. During the year 2023, Apple has repurchased 471 million shares of its common stock for 76.6 billion treasury stock. They have also issued new common stock for 78 million shares during the previous year.
All right, we can go next. Just pretend like you're teaching the class, I think. I think that's a good job. Next. Oh, by the way, this meeting ends exactly at 9:30. Just to let you guys know. And I can always restart a new one if you need. Okay. Who's doing current ratio? I think Yuka.
I think it's Yuka.
Yeah. Okay, let's skip through the next two. 5, 6. I checked all of your ratios. They're
What's
all
this
correct.
one?
I think you're still on slide number 5.
I'm doing number 8 and 9, so that's not mine.
I think I'm doing number 7. All right, so I'll take over from Yuka. I don't know. Are you on slide 7? Okay, there you go. Okay, I was like, my internet is kind of bad. Okay, I'll take over from Yuka. Okay, so for number 7, we're going to be computing the accounts receivable turnover and collection days. So to compute the accounts receivable turnover and collection days, we're gonna need two important numbers in the income statement and balance sheet. We have net sales and accounts receivable net. And so to compute this, we're going to take the net sales from the income statement divided by the average accounts receivable. So we're going to add the accounts receivable of 29,508 million plus 28,184, add them together divided by 2 to get the average, and take the net sales of 285 million divided by that average accounts receivable, and we get the accounts receivable turnover of 13.3 times. So this evaluates how well Apple is granting credit and collecting payment. So Apple converts its average accounts receivable into cash 13.3 times during the period. The tech industry has an average accounts receivable ratio of 11.5 times. This means that Apple is collecting money faster than the industry. So to compute the collection days, or also known as days sale uncollected, we take the accounts receivable net of this year, 29,508, over the net sales of 300, I'm just gonna say the net sales, times 365. And so to do that, we get 28.1 days. So this means that Apple takes an average of 28.1 days to collect cash after a credit sale. The tech industry has a day sales uncollected ratio of 48 days. Apple is more efficient at managing its receivables and cash flow. I've also included Apple's previous accounts receivable turnover in 2022, which is at 14.5 times, and the collection days at 26.1, which means Apple actually is receiving cash a little slower than this year, but is still doing better than the overall tech industry. Okay. And then it's Ray.
All right. So I'm gonna talk about debt ratio, which would be total liabilities divided by total asset. And from the numbers I got from the financial statement and in the order from past to present, we got from 2021, the debt ratio would be 0.82. It came up to 0.86 in 2022, and then came back down again at 0.82 in September 2023. So generally, more than 0.8 as a debt ratio, which shows that the company has a huge amount of debt compared to the asset, which can danger the long-term survival of the company. And for time interest earn ratio would be earnings before tax and interest expense divided by interest expense. And in this case, on the financial statement of Apple company would be the operating income. So from the numbers that I got here, we got the ratio as 357.6, and this would tell us two stuff. First of all is the ability to pay interest obligation, and in this case, really positive, right? Based on the really high result we got from the ratio, and also it shows us the really low risk for the company in terms of meeting their own interest payments. And yeah.
Okay. Are you doing okay? That's Justine. Overall assessment, I need to update this because I'm still processing everyone's info. I don't know, is the debt ratio correct? Is it in 0.8 to 1? Like like current ratio, like,
Oh yeah.
or is it 80%, 82%?
Yeah. Oh yeah, it's 82%. But for ratio, I don't think people usually put like percentage at the end.
Do you
I
guys
have a
know?
question though.
Mm-hmm.
Why did you put 2021?
Oh, because I
2023
think
to 2021. Yeah.
okay, I think I did an extra year. So
Actually,
yeah, because there's more to say, pretty much. And there's like, because in the beginning it was like that, so I don't want to waste the whole row or columns.
okay, that's fine too. I mean, it's okay. I don't think a professor would care that much.
Yeah.
I think I see a lot of debt ratios in percentage. So can we change that to percentage? And the
Oh,
next slide, I think, the next slide, some of your words are like below. So can we move it up so that it's in the, does that make sense? If you go to slide number 9, it's not in place, the words. Okay. I think that's good overall. We might need to time ourselves.